Greetings, green energy enthusiasts and sustainable future architects, and welcome to Stocks Telegraph. Today, we're turning our spotlight towards the sun, quite literally. The world is undergoing a paradigm shift towards renewable energy solutions, and solar power is leading the charge. As climate change concerns escalate, people are actively seeking ways to reduce their carbon footprint and embrace eco-friendly alternatives. The statistics speak for themselves. By the end of 2022, the US alone boasted a staggering 3.9 million photovoltaic solar power systems. And the growth trajectory is nothing short of impressive, a phenomenal 37% year-over-year increase in solar installations. With demand reaching new heights, there's no denying the sun is shining brightly on the solar energy industry. But how can investors capitalize on this burgeoning market? Enter Sunrun, trading by the ticker symbol RUN, a name synonymous with residential solar solutions. But is RUN stock a shining star or a potential supernova? Before we get burned, let's dig into Sunrun's recent financials and see if this solar stock is truly a discounted gem. Before we dive into the nitty-gritty, we want to hear from you. Have you ever considered installing solar panels on your home? What factors do you consider most important when choosing a solar energy provider? Leave a comment below and share your thoughts. Now, let's shift gears and unpack Sunrun's financial performance. In the next segment, we'll unveil some key metrics and see if the numbers paint a promising picture. Stay tuned. Let's grab our financial telescopes and examine RUN's numbers to see if they reveal a stock worthy of a closer look. Sunrun's current price of $13.39 sits significantly below the analyst mean target price of $19.24. This discrepancy suggests a potential upside of over 43%, painting a picture of a potentially undervalued stock. This is further bolstered by RUN's impressive performance over the last quarter and week, exceeding 17% and 12% growth respectively. These figures could indicate a stock on the rise, ripe for a potential rebound. However, it's crucial to acknowledge that RUN is currently trading over 43% below its 52-week high, a sign that the stock has experienced some volatility. The story doesn't end there. Sunrun boasts some truly impressive financial metrics. Their EPS growth this year sits at a phenomenal 84.16%, and their quarterly earnings growth clocks in at a remarkable 64.35%. These exceptional numbers suggest a company not only generating profit, but also experiencing explosive revenue expansion. This combination of a potentially undervalued stock price and stellar financial performance is certainly enticing for investors seeking a high-growth opportunity in the renewable energy sector. Sunrun's financial health appears robust, but there's more to consider. Sunrun isn't a one-trick pony. They're well known for their direct-to-consumer marketing and leadership in solar design and installation across the US. However, they're also strategically expanding their offerings. While the stock price has seen a dip over the past year, analysts remain cautiously optimistic about Sunrun's future, as evidenced by their one-year price targets, which range from a low of $7.78 to a high of $42. This spread reflects some uncertainty, but also the potential for significant growth. While the solar industry has faced recent challenges, Sunrun has identified a pocket of opportunity: storage. Management has openly discussed their intention to transform Sunrun into a storage-first company. This strategic shift has the potential to boost margins and unlock new avenues for value creation. Sunrun's commitment to storage is evident in their recent earnings report, which boasted a 50% increase in new storage installations. Furthermore, they've announced innovative grid service programs like CalReady and Power on Puerto Rico, showcasing their commitment to a sustainable energy future. As Sunrun executes its margin-focused, sustainable growth strategy, investors can expect to see a positive impact on the bottom line. The company is aiming for a $500 million target by the fourth quarter, and their price-to-book ratio currently sits nearly 75% lower than its historical averages. This translates to a potentially undervalued stock with high growth potential in the booming solar energy sector. For investors seeking a discounted entry point into the renewable energy revolution, Sunrun presents a compelling proposition. Sunrun's strategic shift towards storage paints a promising picture for the company's future. The future of solar energy is undeniably bright. According to a recent analysis by Carbon Brief, wind and solar power are experiencing the fastest growth rate of any electricity source in history. This exponential growth is even outpacing the increase in electricity demand, which suggests a peak in fossil fuel generation, and a significant reduction in emissions, on the horizon. This positive trend paints a promising picture for solar companies like Sunrun, as the demand for clean energy solutions continues to soar. Sunrun is making strides towards financial sustainability. Their first quarter earnings report revealed a significant improvement, a loss of 40 cents per share compared to a much steeper loss of $1.12 per share a year earlier. This substantial decrease in EPS suggests a company on the right track. Furthermore, Sunrun is experiencing encouraging customer growth, with a 15% year-over-year increase in new customers. These positive developments indicate a growing and profitable company. Industry experts are taking notice of Sunrun's progress. Goldman Sachs recently reaffirmed their buy rating on RUN and raised their price target to $18. They commend Sunrun's strategic shift towards a more profitable growth model, and support management's guidance of achieving a $200 million to $500 million annualized cash flow run rate by the fourth quarter of 2024. This bullish sentiment from a reputable investment firm adds another layer of confidence to the potential of Sunrun. The future of solar energy is bright, and Sunrun appears to be strategically positioned to capitalize on this growth. Sunrun operates in a rapidly growing industry. Solar energy is experiencing unprecedented growth, driven by environmental concerns and a shift towards clean energy solutions. This tailwind positions Sunrun for potential future success. Furthermore, the company is making strides towards profitability, with improved earnings and a clear focus on margin expansion through their storage-first strategy. Analyst confidence remains high, with Goldman Sachs reiterating their buy rating on RUN. However, some uncertainties remain. Sunrun still faces competition in the solar market, and the overall profitability of the company hinges on their ability to execute their growth strategy and achieve their cash flow targets. Before making any investment decisions, carefully consider your risk tolerance and conduct thorough due diligence. Sunrun presents a compelling proposition for investors seeking exposure to the burgeoning solar energy industry. Their commitment to innovation, strategic shift towards storage solutions, and focus on financial sustainability paint a promising picture for the future. While some uncertainties linger, Sunrun's potential for long-term growth cannot be ignored. Only time will tell if Sunrun will solidify its position as a leader in the renewable energy revolution. Let us know your thoughts in the comments below. Do you believe Sunrun has the potential to be a good long-term investment? What are some of the key factors you consider when evaluating renewable energy companies? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!